Hello friends. The stock we are going to discuss today is NIO Incorporated, which is one of the hottest stocks in the market currently, as the stock price has surged over 130% in the last couple of months alone. So let's look at an overview of the company, their products and services, the latest and trending news about the company, their financial information, and then of course discuss what our game plan should be in terms of investing in this company. Let's get started. NIO Incorporated is a pioneer in China's premium smart electric vehicle market. The company was founded in November 2014, and NIO designs, jointly manufactures, and sells smart and connected premium electric vehicles, driving innovations in next-generation technologies in connectivity, autonomous driving, and artificial intelligence. The company also aspires to redefine the user experience of its customers by providing them with comprehensive, convenient, and innovative charging solutions and other user-centric services. Now let's discuss their products and services. So NIO has a few electric car offerings, but in addition, they are also trying to build a luxury brand overall, similar to Tesla and Apple. We will look at their financials later on to see if the company is investment worthy today, but I must say at this point that I am really impressed by the brand overall and really hope the company succeeds in the long term. So in addition to the cars, the company's services also include NIO Power, NIO Service, NIO House, and NIO Life. Let's now take a closer look at each of these categories. So in terms of electric cars, NIO's flagship product was the ES8, a 7-seater premium electric SUV that was launched in China in June 2018, followed by a 6-seater variant in March 2019. Following this, the ES6, a 5-seater high-performance premium electric SUV, was launched in December 2018 and began deliveries in June 2019. The third electric car launched was the EC6, a 5-seater premium electric SUV in December 2019, which began first deliveries just recently in September 2020. Now let's talk about their additional services. Firstly, NIO Power, which offers customers a variety of charging solutions, the most exciting and groundbreaking one being the battery swap technology that NIO has developed. So NIO claims that it can replace the battery within 3 minutes with a fully charged one, and it has already proven this by completing over 800,000 battery swaps as of August 2020. And in addition to the battery swap service, they also sell a charger pack that can be used at home and also have a growing network of chargers installed in key public locations. The company also offers valet charging services that can be ordered by customers using their mobile phones. Moving on, they offer maintenance services, including lifetime free quality assurance and roadside assistance. The customers can also avail of mobile servicing. It is also noteworthy that most of the power and maintenance services are offered free, which I believe is again an attempt to basically build a real customer-friendly luxury brand instead of just focusing on profitability at this time. Then there is NIO House, which is basically a luxury club membership offered to their customers with facilities that include the living room, forums, meeting rooms, a library, cafeteria, kids play area, and a gallery where they showcase their products. NIO also has a premium fashion line, NIO Life, which again is a clear sign that the company is really serious about building up their brand image. Now that we have discussed the company's aesthetically designed cars and services, let's look at some of the recent trending news about the company, which were the main catalysts behind the massive spike in the stock price in the recent months, even with the current global economic uncertainties still evolving. The most recent positive announcement by the company is that in the month of October 2020, NIO has for the first time ever delivered 5,000 cars within a month. It is a great milestone for the company, which has already seen exponential growth in the delivery numbers this year. As you can see in this chart, except for a dip during the early part of this year, probably due to the shutdowns, the delivery numbers have been trending higher month after month. Another significant news announcement which came out in April 2020, that really boosted the stock price was the announcement of a $1 billion investment from investors backed by the government of Hefei City in China. This was informally a bailout for NIO, which at that time was in a severe cash crunch and the stock price had plummeted to around $3. As part of this deal, a new holding company named NIO China was formed, in which NIO Incorporated had a 76% stake and the government-backed investors had the remaining 24% stake. To further strengthen their liquidity, another deal was made in July 2020 where 6 state-owned banks agreed to extend credit lines to NIO, totaling another $1.49 billion. So from these news announcements, it is clear that NIO has the backing of the Chinese government, which is a huge positive for the company as it tries to establish itself as the leading EV company in China. Another interesting announcement earlier this year was the rolling back of some subsidies offered by the Chinese IT Ministry to electric vehicle car manufacturers. The announcement said that the subsidies will no longer be applicable to electric vehicles with a price tag of $42,000 or higher, thereby disqualifying premium offerings by global manufacturers like Tesla. However, this price-based restriction was not applicable to cars with swappable battery technology, so that meant NIO would continue to qualify for this subsidy. I see this again as a conscious attempt by the local government to support and bolster NIO's business, which is again great for the company. Now let's look at their financials reported as of Q2 2020. As you can see here, the company reported revenues of $526 million and a gross profit of $44 million for the quarter ending June 2020. It is really notable that the company managed to have a positive gross margin this year compared to the previous quarter and 2019, where the cost of sales was higher than the revenue earned, which certainly was not good for the company. However, if you notice, the additional services offered by the company is still not contributing to this gross profit. This could be a tactical move by the company of taking a small loss in the other sales segment to continue utilizing that money to promote the premium image of the brand. So I think this shouldn't be considered as a huge negative. And after taking into consideration all other operating expenses, it can be seen that the loss per share was 16 cents for the quarter, which is also a huge improvement from the previous quarter as well as Q2 2019 when the company was losing a lot of money. So I wouldn't be surprised if the company manages to report a much smaller loss or even a small profit when they report their Q3 numbers in a couple of weeks' time. So be sure to watch out for this. So before discussing our investment strategy, let's now talk about a couple of risks that we need to consider. The first risk I see is that NIO doesn't manufacture the vehicles in their own factories and have outsourced this to another organization called JAC Motors. So there is always a risk of some disputes arising in their partnership or a major quality issue that will be detrimental to NIO's brand image and growth. Having said that, it should be noted that JAC Motors is actually a state-owned company, so as long as NIO is in the good books of the government, it may not be that big of a deal. The other major risk we should always consider before investing in American depository shares of companies operating in China is that in future there could be some regulations on foreign investments imposed by either the Chinese or US governments, which may cause the stock price to drop significantly. This risk is not exclusive to NIO, but also to other companies like Alibaba and JD, and it is quite unlikely to materialize. But it is always something to keep in mind, especially with the evolving political and trade situation between the US and China. So with all this information, let's now discuss if we should consider investing in NIO at the current prices or if it is not a good idea. In my personal opinion, the company has several positives going their way, and even though they may be far from profitability, I think it is worth investing a part of our portfolio into the stock. I do think that it is better to pay a lower price, so it would make more sense to buy in batches using dollar cost averaging, as I explained in my previous video about Celsius Holdings. So please make sure to check out that video if you are not aware of how dollar cost averaging works. It would be good to initiate a small position now at around $38 per share and wait for lower prices to buy more. So as you can see in this illustration here, I will be using dollar cost averaging to invest up to 2% of my portfolio over time, and hopefully I could build the position up with an average cost of around $25. I know it sounds crazy now to be hoping to buy at 20 when the current price is $38, but with these growth stocks, anything is possible in the short to medium term. And we could also use option strategies like selling puts and covered calls to try and reduce the average cost further. If you are not familiar with how these option strategies work, do let me know your questions in the comments and I would be happy to answer them. So overall, personally, I am very bullish on the company and the tailwinds it has in China with the current EV trend and also the future possibilities of autonomous driving, which NIO is certainly gearing up to take advantage of through their autonomous car, the EVE. This car, which is still in the concept stage, will be using Intel's Mobileye technology, which is expected to be the market leader in the space. It will probably take another 5 to 10 years at least to get this car to market, but the future is certainly super exciting. Hope you found this video valuable, and as a friendly disclaimer, please note that I am not a licensed investment advisor and my videos are only meant to document my views on various investment related topics that I am interested in. So please consult with your own investment advisor before making any investment decisions. And if you enjoyed this video, I would really appreciate if you can please leave a like below and subscribe to my channel. Have a great day, and I will see you in the next video.